basis. Cash basis. When you receive the money for in rental, they charge you. If you don't receive, they don't charge you. Same thing for your rental expenses. If you pay, then they allow you to deduct. If you not pay, they don't allow you to deduct. Clear? Okay. So because of that, when you are looking at your this rental, all right, so this interest receivable, okay, because here the first one is interest income, 160,000. So your carry amount is the one that not yet received. So in your carry amount is 160,000. Your tax base is nil because not yet received, ma. All right. So that will give you this temporary tax deductible, okay, temporary differences. Okay, that means that for the income tax, they don't charge you the interest, this interest income. So this year you pay less tax. All right. Okay. But the tax saving that you have now will cause you to have the tax liability in future. Because next year when you receive the interest, then the income tax will charge you based on the interest they receive. Right? So the tax saving today will causing the deferred tax liability. Are you clear? Okay. Now, second item is the accrued expenses. Now, if you look at your accrued expenses, here, use this example. So you have to assume that all these accrued expenses are all tax allowable deduction, right? So in that cases, you are accruing these accrued expenses, which is 20,000. Now again, when you accrue means you not yet pay, isn't it? All right. So if you not yet pay, income tax will not allow you to minus. Okay. So if you not allow you to minus, then in that cases, you might subject yourself for more tax then. But however, for these cases, because if you assume all the expenses are tax allowable, then in that cases, in your this company account, it will show as a current liability. So the tax base also allow you to show them as your tax base amount. So that will give no differences. Okay, all right. Okay, so that is what happening to this treatment. Third one, the prepaid rental income. So when you have the prepaid rental income, okay, that means that somebody, okay, you have paid this rental income in advance, isn't it? All right. So go to this part of the rental in advance. Okay. The rental received in advance. So in that cases, okay, so for that case, for that incident, but this one is a prepaid rental income, lah, okay? So you have to compare for your carry amount and your tax base, right? Okay, so for the tax base, okay, since this enter is not yet, sorry, the prepaid interest is here. So you have to identify for your this tax differences, all right? Okay, so that is on your prepaid interest. Next one, last one, prepaid rental expenses. So prepaid rental expenses here mean you pay your rental expenses in advance. Okay, so if that's the case, this you pay more rental, so the income tax will allow you to minus more rental. So in that case, you have the tax saving. But your tax saving will cause you to have more tax debt, right? Okay, so that's why for this prepaid rental that you pay, then okay, there will be, where is the example I should show highlighted to you? Not here, not here. the earlier example here, right? Nên là need the live video. Open another work. Đây gì đó. À. Last page. You only do the last page only, is it? Am I right? Last page enough rồi là. Last page is enough for that. Hmm? Okay. So it will be give rise to a deferred tax liability. Okay. All right. Because why? Your tax saving today will cause you to have more tax in future. So that's why they will give you the deferred tax liability. Just now, this one will give you the deferred tax asset. All right. Okay. Because you are paying the more tax now based on the rental income that you collected. So you pay more tax now, but it will give you a tax saving in future. Okay. Because you must always remember, deferred tax is the examples that we always make use when you have to think, today my income tax due to this issue, am I paying more tax or am I paying less tax? All right. If I, due to this incident, if I pay more tax, then in that cases, it will give me the tax saving in future. So in that cases, it will become your deferred tax asset. Understand? But if today, due to the income tax ruling, you have to pay more tax. So when you pay more tax, it will give you the chance to pay less tax in future. Okay? So that's the first tax asset. But if it's reverse, you pay less tax now, but it will give you pay more tax in future. It will give you a liability. Are you clear? So that's why you must know what is the rulings of the income tax. Now, in future, when you got chance to do the deferred tax, especially when you work with those audit firm, all right? Okay. Usually, to prepare the deferred tax, you need to have a copy of the tax computation from the tax agent. I mean, you ask the tax computation from the tax agent, and then together with that, you also ask a copy of their non-current asset schedule, which they calculate those initial allowances and capital allowances. All right. Then together with that, with your financial accounting amount, then you do the identification of the temporary differences and permanent differences. Are you clear? Okay. So that is how they start off with the deferred tax. All right. Okay. Ai, susah punya kerja. Okay. Next, penalty. Now, the class penalty is automatically become a permanent differences. Share đi ba. No. Here all bulat rồi đi bạn. No, share đi á. And let's stop sharing. Share again. It's a day. No. You see all the H here is break there what? Hakim can see or not? Ah. Dear Muhammad Hakim. Can you see the screen? Answer. In the first place, are you there or not? Okay. Okay. So for this part of the penalty, you should know that it is a permanent differences. All right. So that will automatically don't give rise to any deferred tax. So actually, if you are going to draft this part of the answer, I will say that you will just tell me it is a permanent differences, therefore it will not give to any deferred tax issue. Okay, so that's why you don't really have to use the example here. Are you clear? Okay. Next, provision for warranty. Now again, deferred tax don't accept any provision. They will always add back the provision. Then they will minus any of the expenses that you actually incur. Okay, all right. So that's why when you have this provision for warranty, what happening in a P&L account, you didn't minus the provision. Is that so your profit become less? Agree? But when we perform the tax computation, the tax agent will plus back the provision. So that will causing the company to pay more tax. Understand? So when you pay more tax this year, next year when you actually incur those expenses, then you can claim those expenses. All right. So that will give you the cases of the deferred tax issue. All right. Okay. So that's why you look at your this part of the explanation. The class before exam, print these few pages, burn and then swallow it. Make the life easier, isn't it? Huh? Okay. Make the life easier. Okay. So that will give you a deferred tax asset. All right. So take the amount multiply with 25%, which is the tax rate. The class, when you give the answer, you cannot stop here. You cannot stop here. You have to further use the amount multiplied with the tax rate. Understand? Because the question is asking you to work the thing with the tax rate 25%. Calculate what is the final amount of tax expenses and the deferred tax which you are required to report in your current year 2022 financial statement and the accounting entry. Clear? Okay. So that is what you have to identify the amount that you times the tax rate. Clear? Okay. Next one. Financial asset, which they buy 55,000. At the end of the day, fair value is 60,000. So there's a gain on this amount 5,000. Now, if it's a 5,000 gain in our P&L account, we'll update this kind of the gain. So your profit will be higher by 5,000. But income tax won't recognize this 5,000 gain. Income tax only recognize the gain when you actually sell the item. Okay, so therefore, when they don't recognize this gain, you pay less tax, isn't it? So that will give you a deferred tax saving. All right, then you are going to pay more tax when you actually sell it. So therefore, use the examples given here for your financial asset held for trading. All right. So that will give you a taxable amount. All right. Okay. For your gain. All right. Now, use this example. Next, research cost 20,000, development cost 100,000. Research cost is automatically written off when you are incurred, isn't it? So income tax also do the same thing, P&L do the same thing, so there is no deferred tax issue here, right? But for your development cost, based on our study, development cost, if they meet the criteria, they are allowed for capitalization. All right. So if they allow for capitalization, income tax don't have this capitalization criteria. Income tax will directly written off when you incur the development cost. So because of that, in your tax computation, this development cost will be minus. So they will enjoy some tax saving. You pay less tax. All right. Okay. How you will amortize it. So therefore, this kind of the tax saving will give rise for your this kind of the deferred tax cases. Okay, so your tax base is 0, but your carry value amount will be there. So that will give you this taxable temporary differences. Okay. Now, use again the examples given here. Last one, property. This one, you need to apply your PPE for revaluation model. Now, the question here say that opening balance of the carry value is 300,000 with the remainder life 10 years. Asset has been revalued to 400,000. So you have to identify what is your revaluation gain, right? So after 1 year, your property amount is 270,000 with the depreciation take up. Okay, but your revalue amount is 400,000. So you identify your revaluation gain loss. All right. Now, opening balance for this property is 200,000 and the tax is given annual allowances of 10,000. So what is the tax base amount? 200,000 minus 10,000, that will give you 190,000. Okay. So if that's the cases, what happened? Look at your these property cases with the earlier examples given. So this one tell me whether you read the textbook or not lah. Okay. All right. Example here. Not this one. This one no revaluation. Must find one with revaluation. Okay. How? Wait. Anyhow, work out your revaluation gain loss. Use this one lah faster lah. Huh? This one you all have to go and request the copyright. Huh? Okay, don't ask me. Huh? Okay. So your revaluation gain is 130,000. So compare, you have deferred tax issue of 210,000. This 210,000 times 25%, that will give you a deferred tax liability. Deferred tax liability. Okay. But this item is due to your reserve. So what happening? You have to match. So your deferred tax also have to match with your reserve, which you put under other comprehensive income. Okay. So because of that, it will move to your other comprehensive income amount. Survive. Now, other finishing on this part. So what you do is that you have to summarize all in your accounting entry. So summarize in your accounting entry lah. Add all your deferred tax liability, add all your deferred tax asset. All right. Except for the item of revalue amount. This one have to show them separately. All right. Then only work out your deferred tax issue. Okay. So in that cases, so at last, actually you don't really have to show individual journal entry. You just show the last part. Okay. Add all your deferred tax liability and your deferred tax asset. This one, 20,000 separately, debit to the other comprehensive income deferred tax expenses. Debit your P&L account for deferred tax expenses. Credit deferred tax liability. The class after you have done this one, if you want to play safe, you should show the extract of your P&L account and your extract of your balance sheet. Okay. All right. So you no need to show all the upper journal entry. You summarize them, show the journal entry, then show the extract. Okay. All right. Die đi. Never mind. Exam time, you got optional question, isn't it? So one time. Okay. All right. Other finishing on this part. Oh, the class, I must say, deferred tax is always shown as the non-current liability. Non-current liability. Okay. Because it is the tax liability that pay more than 12 months after your balance sheet date. Clear? Okay. All right. Any question? expert there. Okay. So go and read up your 16 page. If you don't have time to read up, then take portion by portion, learn and drink lah. Especially the belakang one, okay? Especially this page, okay, from here onwards. Page 10 onwards. Okay. All right. After finishing on this part, want to look at your ratio analysis. I really pengsan. Luckily, they only give one question only. Okay. When you calculate the ratio is a relative measurement, right? Now the question asks you to calculate the ROA. ROA expressed in percentage, amount, time. What do you think? How do you express your ROA? In percentage, amount, time? It's in percentage, isn't it? All right. Okay, no, ratio got many ways of express it. You can express in percentage, you can express in time, you can express in amount. Okay. Return on common equity, right? Also in percentage. GP margin also in percentage. Inventory turnover, you got 2 inventory turnover, 1 in days, 1 in times. What do you guess about this one? 4.5 times or day? Times. So some of you go and calculate days. If you calculate days, how are you going to do a comparison? You must always remember, calculate any ratio, the golden rule is you must able to compute with the same basis, and your result must be used on the same express manner in order to allow you to compare like with like. Okay, I always say compare apple with apple, orange and orange. No doubt all are fruit. Okay, all right, but different pricing, different dates. Same thing, if you look at your account receivable turnover, you also got 2 measurements, 1 in days, 1 in times, isn't it? So this one in days or in time, times also. So, okay, you must make sure that you calculate on the same basis. No doubt examiner won't tell you which formula you're supposed to use. But you look at the question. Part A want you to do the measurement of the calculation. Part B want you to make explanation, all right, for this ratio in comparison with prior year, I mean last year, and with your industrial average. So that's why impliedly the examiner want you to make sure you know what formula that you are supposed to use. Okay, all right. Hey, my dear accountant, when you draw the person, as I always say, you don't draw until all the heart usus, all come out one, isn't it? Correct? Okay, you just draw the person like that only, what? All the inner part organ only you draw one. Okay, so that's why examiner also assume you should know what formula they're supposed to use when they are giving you the last year and the industrial average. All right, okay. All right, now when you make the comparison explanation here, I need to highlight, you must always compare this year with last year, this year with this year industrial average. Okay, so when you write any increase or decrease, you must compare this year compared to last year, is it increase? This year compared to last year, is it decrease? Understand? Some of you go into Bali, compare last year with this year. So next time, I must compare your result with your kindergarten result and your result now. Isn't it? So take the whole year, the kindergarten time, you score everything 100 marks with your current result. You're very sharp. You see, last time you got all 100 marks. Where got people make comparison like that one? You must compare current year with last year, current year with current year industrial average. Understand? Okay. Okay. Luckily, I choose this topic only. Otherwise, okay, heart attack. Okay. Luckily, I'm not your lecturer for FAR1. Otherwise, I also got heart attack. Okay. Okay. Now, for calculation, basically, I see no problem on those ratio. The one that everyone sure correct one is item 3. The one everyone correct. That's the only one I can find everyone correct one. Okay, GP margin. All right. But when I come to return on asset and return on common equity, return on asset, okay, some of you are using the closing total asset. Some of you are using the average total asset. Okay. Now the class, basically you should be using average. All right. Okay. Given the charts, if you are giving the average to the opening asset and the closing asset, so you should use the average closing asset. All right. Okay. Now, when you are using the return on average asset, okay, what is the profit that you are supposed to use? Okay, lah. Go and download one of the student assignment. Don't worry, you type one. No, you type one, ma. Aiyo. Okay. Okay, look at the Nibashinian. I cannot make. Aiyo. Okay. You take profit after tax divided with total asset. All right. You take 4270 here. Okay. Yes. Now, the class. You learn the accounting entry. Accounting equation. Total asset equal to non-current asset plus current asset. That is also equal to total liability plus equity. Am I right? Yo, really must go back to FAR1. No, damn xia sui. Okay. Right? Now, if it's equal to total liability plus equity, look at your P&L account. Which line of the profit that giving the reward to total liability and equity? Tell me. Which line? Which line? Four two 4070, 5470, 12 million. Okay, 5.7 million. Must wonder Miss Bear where can find 5.7 million. Calculate lah. Hey, my future accountant. Hey, you know P&L account got many profit one, you know. You got operating profit. You got profit before tax, before interest. You got profit before tax. You got profit after tax. You got profit after the preference dividend. Hmm? Hmm? Where? What is this accountant? Aiyo, damn xia sui. That's why when students give me net profit, I will ask them the first question, which line of net profit? P&L account got so many profit. Which line? Hmm? Tell me, how do you draft your P&L account? Traditional P&L account. Okay, let's start with sales. With your turnover. Okay, some company use the words of turnover, isn't it? Okay. Okay lah, chính xác lah. Chuẩn. Minus your cost of sales. You got your gross profit. Then, after that, minus. Hey, the class, this one you really have to understand, you know. Otherwise, next time, if okay, you are the accountant and I'm the shareholder, I attend the annual meeting that time, I ask you the question that time, how you going to answer me? Okay. All right. So before you attend the meeting, you must see whether Miss Bear inside there or not. Okay. All right. After minus the gross profit, what else are you going to minus? Wait, this one must be like your fingertips, eh? After minus gross profit, what's the things you're going to minus? What expenses? So many expenses. Okay, fine. Operating expenses. Okay, fine. After minus operating expenses, so fast. You have operating profit. Then after that, you may be at other income if you have any other income. All right. Okay. Then you might be less. I don't say that. Okay, other charges as well. If you have any of the gain loss on selling of the fixed assets. Okay. Then after that, wait. You have the net profit before finance cost. Then, next time I will purposely go and attend go and purposely buy some of the company public listed share there. Go and attend the annual meeting. See who is the accountant down there. Okay. Okay. So you minus your finance cost. Then you reach the net profit before tax. Hey, the class, you must always remember, in published account, any of the figure you give subtotal, you must name that subtotal. You cannot leave your subtotal empty like that one, no. You catch what I mean? Anything I got subtotal, I must give the name subtotal. Okay, so after that, you minus your current year tax. You minus any of your deferred tax that you need to accrue. Then you reach net profit after tax. Okay? Any more? If you have any of the preference dividend, you have to pay your preference dividend first. Okay? Then when you come to the net profit belong to your ordinary shareholder. Okay? Then when you reach here, the traditional one is that you might add your retained earning brought forward. Then you minus, okay, your ordinary dividend that you pay in order to reach your retained earning carry forward, which tally to your P&L account. If you want to make any transfer of the reserve, also can. Okay. All right. I give you this whole thing, scientific one, complete one. So the class. Just now you tell me your accounting equation. Non-current asset plus current asset equal to your total asset is also equal to your current liability plus non-current liability plus your equity. Isn't it? This one, if you don't know, I will send you back to FAR the FAR1. Okay. Now, the class. If you calculate your question just now, wait, that's why I don't want to teach FAR1. If teach FAR1 later, when I teach FAR2, I will die again, heart attack again. Teach FAR3, I will die another heart attack again. All right. Okay. So that's why myself don't teach the earlier FAR, so that the student don't die for heart attack. I also don't need to die for heart attack. Here, this one put under the ratio. Okay. In the class, how many times I must say, study any knowledge must study with understanding. Okay. Hello, study with understanding. So if you tell me your total asset for your return on asset, you use total asset. Okay. So if you use the total asset, in my this part of the P&L account, which profit line is supposed to use? Tell me. Make it smaller lah. Don't say that you cannot see. So which line of the profit is supposed to use? Tengok. Which line of profit? You got so many profit. 1, 2, 3, 4, 5, 6. You got 6 profit. Don't count this part. You got 6 line of the profit. Ayo, FAR2 3 student nya wo. Which line of profit? You got 6 profit. Which line of profit? 5. Net profit after tax. Everyone agree? Everyone agree? Agree. So either everyone pass or everyone fail like that lah. The life is always like that, isn't it? Oh. The guy, what do you understand with this P&L account? If you are the owner, look at this P&L account. What this P&L account try to tell you? If you are the owner of this business, what does this P&L account tell you? Why should I take the P&L account take with the sales minus? I can also show P&L account by starting with net profit belong to ordinary share plus the preference dividend plus the tax plus the finance cost plus the other charges minus other income plus my operating expenses equal plus the cost of goods sold equal to sales. And also, isn't it? Why not I prepare the P&L account reverse? Instead, I have to prepare the P&L account from sales minus. I agree, but the issue is that what is this P&L account sequential run? Why not I take sales minus the finance cost first, minus the operating expenses first, minus the cost of goods sold later on? I still reach the same net profit to ordinary shareholder. Why must I follow this sequence? Why can't I change other sequence? Oh, because FAR say must follow this format. But that's not the answer that I want. As I say, when you read MFRS, you must know what is the rationing that MFRS prepared that standard. MFRS prepare any standard always got its reason behind that. Either one, okay, to standardize all the accountant practicing method. Second is to solve the problem, okay, of any issue that has been pertaining before that. Because you must know accountant still a human being, still human being. Different accountant might use a different method. So to solve the problem, they will come up with the accounting standard as a guideline. Okay. Or MRIs come out is to confirm, okay, some of the business practice. So that's why, okay, lucky I'm not a businessman. If I interview an accountant tell me this answer, no need lah. Okay, all right. Okay, so 201 already. All right, today, my dear accountant, you must learn accounting financial statement from another way. You must know this accounting equation. This is what your total asset equal to your total liability plus equity. I can also draw the accounting equation by taking total asset minus current liability equal to my non-current liability plus equity. I can also prepare this equation total asset minus total liability equal to equity. It's a mathematical issue, isn't it? Right? But whatever the method that I'm doing, my this P&L account use the same approach. It won't run. Your balance sheet, you can use either these three formats, but P&L account, you only have that one sequence run. Okay? So what's the rationing? Put yourself as a businessman. Put yourself as a businessman. If you are the sole proprietor, this is your income, your sales. Now, when you conduct the sales, what are the expenses you must settle first in order to make your business to be running smoothly? So, just like if today I sell the product, collect the money, assuming all my things run on cash lah. I take the money. Who I need to pay first? I have to pay my material supplier. I have to pay my labor. I have to pay those production expenses, isn't it? Otherwise, your worker boycott, your supplier don't send the material to you. If you don't pay electricity, TMB cut off the line. okay, you can run the business. Okay. And after that, you pay the next. What other you have to pay next? Your those the operating expenses, which is your admin people, your selling and distribution expenses, they all to stick, isn't it? After you pay all this, with the balance of the money that you have, only you pay your interest, all right? Okay, and those loan amount, all right? And also your leases. After you pay the, provided you make the profit, income tax only come in and tax you, isn't it? Because if you make the losses, will income tax you? No. Agree? So that's why provided you make the profit, you pay your income tax payment. After pay income tax payment, still got anything left over? You pay your preference shareholder, and provided still got anything left over, then only that one is belong to the owner. Okay. Now the class. When you tell me this equation total asset, which line of the profit that the company pay for the total asset? On the other, what is the profit that pay to your what is the profit that entitled for your liability party and your owner? Which line? 1, 2, 3, 4, 5, 6. Which line? You all learn with finance some more already, oh. A finance also got such issue investment and financing, isn't it? So asset is an investment. Financing is a liability and equity. So which line of the profit that belong to pay those like financing people? Who is your liability? Hey, apply your finance knowledge. Mana satu? Damn xia sui. Which one? Net profit is a reward to the shareholder. Preference dividend is a reward to the preference shareholder. Which is your equity or your liability? Finance cost is a reward that you pay to your lenders, okay? And also those financing company. So if you are going to use the total asset, you are supposed to use this profit. You must always remember, total asset means total liability and equity. So you must match your net profit with the profit that you are entitled for rewarding your total liability and your total equity. You cannot simply pick any profit and hentam me. Oh, Miss Bear, that is a net profit. Okay? So if I use the total asset, you are supposed to use this line of the profit. If you calculate your return on asset. If you are going to calculate your total asset based on your this amount, okay, after minus current liability, when you take the total asset minus the current liability, it is equal to The class you don't study accounting means accounting, finance means finance like that lah. Total asset minus current liability is the same as non-current asset plus net working capitals. All right. So that's why if I use that as my asset, then this finance cost here, you have to identify how much is the interest for your short-term loan, how much is the interest, okay, for long-term loan. Then from here, you find out what is the net profit that after minus the short-term loan interest. Okay. Then from here, you calculate based on your non-current asset plus your net working capital. If I use the third one, the owner, then if this owner is only the ordinary share, then you use this line of the profit. You use net profit belong to ordinary shareholder. Okay, with my class, you must do the matching. You cannot simply dump any of the nominator and denominator that they don't match. You must make sure that your nominator and your denominator are matching. Then only the ratio that you calculated have a proper meaning. Clear? 係sweating. Okay. All right. So that's why. Okay. Come back to this question. If you define your asset as a total asset, in this part of the P&L account, you should calculate what is the net profit before finance cost. So take 5470 plus back your finance cost 230,000. Then you should use the profit of 5.7 million. Hey, you thought that calculate ratio is just simply remember what formula then 很淡, remember what formula then 很淡, remember what formula then you 很淡 like that one. Then it's might as well just do the robot to do the work lah. Why should I ask you to do the work then? Why should I pay accountant and the financial analyst such a high fee just to do that robotic work then? Why should you pay so much fee to those people who analyze the account then? Yeah, you thought you pay the money, people don't do put in the effort one. Huh? Depends on how you define your asset. To define your asset. If you calculate the asset is total asset, then you have to use the net profit before finance cost. If you calculate the asset is a net asset, then you use the profit after tax after preference dividend. If you calculate the asset is the non-current asset plus working capital, then you use the net profit after the short-term interest. So you must do the proper matching. You cannot simply dump the thing like that one. You must do the proper match on that. If you calculate based on total equity, including the preference share, then you use the net profit after tax. Hey you. Okay. So take note, yeah. That's why I tell the student, I never want to tell the student to memorize the formula. Memorize formula is not the proper way if you don't understand. If you calculate the total asset, total equity based on including preference share, then you use the net profit after tax. Okay, this one is based on your total equity. This one, you use it based on your ordinary equity, or we use the words of net asset after minus your preference share. Okay. All right. Okay. That's why the class. You must know how to match this thing with your balance sheet or with your SOFP. Okay. Okay lah. Don't want to die like that. Next. This one close. Don't want to see. All right. Next one. Where is my equation? Here. Next formula. Return on common equity. The class equity here means all shareholders fund. Shareholders fund. All right. So for this case, the net profit they're supposed to use is profit after tax 4.27 million. So this one correct. In your balance sheet, how much is your common equity? The question here only got one types of the share, which is ordinary share. So you should use total equity here 19,190 if you use the closing equity, including your retained profit, including any of your reserve. Okay, because who is the owner of the retained profit? Also shareholder. Who is the owner for any of the reserve? Also shareholder. It is part of their fund. Okay, so that's why when I say common equity, they mean all the shareholders fund. Clear? Okay, don't die. All right. You cannot just use the ordinary share because ordinary share here only include the par value and the share premium. They also deserve for the retained profit. All right. Okay, gross profit margin, don't have to say, the one everyone correct. If wrong, also die out. Inventory turnover, as I say, is in time. So you take your cost of goods sold divided with stock. The one most of you get it done correctly. But just that some of you calculate average stock, some of you calculate closing stock. For this round, I tutup mata, I accept either way because the question didn't say whether average stock or closing stock. All right. Now, account receivable turnover, you take the sales divided with your account receivable, which also expressed in times. Okay, you got what I mean? So some of you use average account receivable, some of you use the closing account receivable, also I accept it because either way, the examiner didn't say which formula they're supposed to use. But theoretically, you should use the average lah. But if you're the outsider, you don't have so much data, you might use the closing stock or closing account receivable. Clear? Okay, so that will be the case. Now, for the interpretation here, okay, thing is not yet finished. Warehouse, production department, okay, or in the finished goods store, where do you put your work in progress? Huh? Production department lah. Yo, you did say not yet finish, ma. So that's why work in progress also based on production cost that you measure based on until the stage you complete. You all study process costing or not? No. Then what you study? Then what you study? I must go and ask Mr. Subradi, what's the syllabus? Didn't study process of costing. You will study something process costing, then what is the equivalent unit when you measure your output, isn't it? Yo, sweating off. I still take handkerchief here. How do you value your raw material? Huh? How do you value your raw material? Just that I buy those plywood steel. So after I do the stock take, how do I value this plywood and the steel? Huh? Hmm? Die. You don't tell me production cost, I'll throw you out from the window. I will tell my maintenance, the technician open the window. Only one floor, only won't die. Luckily, I teach this subject, this topic, okay, last chapter. If I teach this chapter, beginning, then, okay, no need to teach other chapter liao. Raw material is something that zero production, that you not cheap produce. Alright? So that's why you cannot value based on production cost. Production cost including labor and overhead. You haven't do anything yet. Okay. So you based on your today's cost plus any of the incidental costs that you bring your material up to its location. Ayo, my dear accountant. Next time, I really want to go and check where your work is. Then I go and purposely buy that public company share. Then I purposely go and attend the annual general meeting. Okay, so that's why when you are valuing your, so if you don't want to be questioned by me, then you better study well. All right. So therefore, when I calculate the stock turnover, finished good is using cost of goods sold. Why? Because the reason that you produce the finished good is meant for sales. All right. So you match with your cost of sales. Okay, this one fine. If it is the WIP, you match with your total production cost, because when you produce the WIP, you want it to be completion in the production. So your denominator will be total production cost. Now, when you measure your raw material turnover, you use your raw material consumed. Because the reason you buy raw material is for the production consumption. So therefore, when I calculate the inventory turnover for the raw material, I use the raw material consumed. Okay. Again, I must say, you must match your different types of the inventory with the different basis of the measurement that you are keeping those stock. What's the reason you keep raw material? To consume in the production. What's the reason you keep the finished good? For sales to your customer. What's the reason you keep your WIP? To get your production complete. So that's why your basis of measuring all this must match with your different types of the raw material. Clear, my dear accountant? Hả? Okay lah. Let me understand. Okay. Okay. So this one is a cash conversion cycle, which measuring the time taken for you to get back your cash. When you take your receivable day, they're waiting to get your money back from your customer, plus the inventory days, they're waiting that you sell the goods, keep the goods before you can sell to your customer, minus the credit term that your supplier given to you. Then the balance amount will tell you how many days that you are supposed to wait in order to get back your similar amount of the cash. Which chapter I teach in the financial management? God, financial management taught liao. Financial management also finish syllabus liao. Okay. Those who finish and those who on the way to finish also should have learned, yeah. Okay, because I did finish the syllabus, yeah. Working capital management. Under the working capital management of my financial planning. Damn xia sui. This one, okay, don't want to got heart attack by myself. Okay, all right. So you have this operating efficiency ratio measure the utilization of the asset and profitability ratio. Okay, so this one, I want to tutup mata, you must know. I don't want to go through. All right. Okay. So you can see where calculate the return on total asset, which is your total capital. Total capital here means your liability plus equity. You can see the net income here, add back your interest expenses. If you calculate the return on owner equity, then your average equity here is a denominator. Here you take the net income minus your preference dividend. All right. Okay. Now come to this. This ratio, ROE, is the important ratio in the eyes of the shareholder. Right. Now, when we calculate the ROE, we are taking the net income belong to shareholder divided with their equity fund. Now, to analyze any issue that causing the ROE increase or decrease, in fact, is made up by three components. Any of the impact from your company net income from a business will also cause the impact on the ROE. Your asset turnover here is representing the management efficiency. And the last one is taking your total asset divided with your common equity. So that's why when we analyze the ROE in fact is influenced by these three factors. Okay. And these three factors is explained in your DuPont system. All right. Okay. Now, this DuPont system is trying to look at how the return on the equity is impacted by the company financial leverage. All right. I mean, for those companies who have low borrowing, usually their ROE will be higher. Okay. And their sustainability during the bad economic time will be higher. Okay. Simple issue. During the economic good time, most of the company have no problem for achieving their profitability performance. During the economic bad time, which company that will be subject for any bankruptcy exposure? will be those companies who have high borrowing. Okay, because when you have high borrowing, you have high committed costs. You also have the high scheduling payment that you have to make. So that's why usually for those companies who have high leverage here means high borrowing. Okay, so basically their ROE will become a bit lower. Okay, because most of your fund have to use to service your finance costs first before you let remainder fund to your shareholder. Okay, so that's why this is what been pinpoint in your DuPont system. Okay, all right. So that's why when you look at all those profitability ratio, this is how the things done. Okay, so I leave this particular slide for you to read through. Actually, this slide you all should have gone through, isn't it? Some of you have this slide before already. You know which chapter I take this particular slide? Investment analysis. You study investment analysis. Okay. Never mind. Those who already study it, kindly revise. Those who haven't studied, study in advance. Okay. Now, basically, ratio analysis is meant to help outsider to assess the company risk. Company have two types of the risk: business risk and financial risk. Business risks are usually pertaining to the types of the business the company is having, which usually measure based on your gross profit margin and your operating profit margin ratio. Right? Okay. So much so your asset turnover. Financial risks are usually measured based on your gearing ratio and your interest cover. Okay, so that's why when people look at the ratio, people tend to group what are the ratio help me to assess the company business risk. What are the ratio that help me to assess the company financial risk? All right. So usually business risks are affected by your sales variability and your operating leverage. Now you learn break-even point, isn't it? I'll suddenly go to break-even point. Now let me ask you, as a company employee, do you want your company have high break-even point or low break-even point? You know what's break-even point or not? Huh? What is a break-even point? So it's the sales amount that causing the company make no gain, no loss. So as a company accountant, you want your company have high break-even point or low break-even point? High. Agree? Oi. 10 accountant here. High break-even point. Die. You must have a low break-even point. The higher is your break-even point means that you must able to get more sales in order to make your company no gain, no loss. Low break-even point that means that when your company make less sales, it's already enough to cover your fixed costs. So the balance will go to your profit. Yo, in the class, I must highlight this one to Mr. Subra Liao. Okay. You know how to calculate break-even point? Simple issue is taking fixed cost divided with your contribution per unit if you talk about quantity. Or take your fixed cost divided with your contribution to sales ratio if you calculate the sales amount. So people want low break-even point. Where got people like high break-even point? Maybe I have an aggressive accountant. Okay. I thought most of the accountants are conservative. Okay. Okay. I really have to play hard. Final exam, don't come out such a difficult topic. Just come out something like just now that one, simple one. Calculate gross profit margin, calculate the inventory turnover, don't come out something like that. Okay. Financial risk is the measurement of the financial gearing. So this one usually you have 3 sets of the ratio to measure your financial risk based on your balance sheet ratio, your earning cash flow coverage, and your cash flow over your outstanding debts. Okay, so this is the debt equity ratio that you have learned. Take your total long-term debt divided with your total equity. All right, this is calculating the long-term debts over your total long-term fund. Basically, the total long-term fund, it means including your non-current liability plus all your equity. Okay, can you please make sure link this one to your finance topic? All right. Okay. Now, this is the ratio that used to calculate the interest cover. Now, normally people want to see high interest cover. This one don't to ask you. Ask later got high attack. People want to see high interest cover rather than low interest cover. Right? That means that I want to make sure that I make more than enough profit to cover those interest charge that I need to bear. Okay. And this is the cash flow coverage ratio that people use to measure what will be your operating cash available to cover your interest as well as your committed costs. Okay. By the way, exam no formula given. The one you must know. Your exam paper don't give formula. All right. Okay. When you calculate the cash flow, don't forget depreciation is not the cash. So you need to add back to your net profit. Okay. So this one, okay lah. This one read yourself. I want to talk about this one. Determination of the growth. Now, as the outsider, people would like to see whether company is growing or not. So how you work out their growth rate? Take their retained profit percentage, multiply with the ROE. Usually, the more company keep the retained earning is meant for investment, So that's why by doing that, that will help the outsider to make estimation the growth rate of the company. Okay. So all this one limitation half hour. Okay, normally you all will do that. Okay, so this one not many pages. Go and read yourself the pages. Last part I want to highlight is the Z-score ratio. Have you heard the Z-score ratio? Also no. What you're going to study all the while? This Z-score ratio is the ratio people use to predict the company bankruptcy. You know, the reason why people do the ratio analysis or why the investor pay the money for the analyst to analyze the company. The main concern is that they want to make sure that company is not in the bankruptcy exposure situation. And this Z-score ratio is one of the multi-ratio that people have been using for predicting the bankruptcy risk. Ayo. Luckily, this one only FAR3 only. Still got this subject for FAR4 and 5 or not? I hope ratio analysis stop here. If the ratio analysis someone continue, yeah, lo. Okay, all right. Now, the Z-score ratio is made up by 5 components. It's calculated based on 1.2 multiplied with working capital divided with total asset plus 1.4 multiplied with retained earning divided with total asset plus 3.3 multiplied with earning before interest and tax divided with total asset plus 0.6 times market value of equity divided with total equity plus 1.0 multiplied with sales divided with total asset. Okay? And people have used this one to predict the financial crisis in year 2008. Okay? So this debt score ratio is giving an indication. Any company where calculate if the score is below 1.8, there's a high likelihood that that company will pay for bankruptcy. But if we calculate this one, the score is above 3, I mean that company is quite safe. So that's why Z-score ratio have been used as the prediction of the company bankruptcy event. All right. Okay. So that is what you are supposed to take note. Okay lang. Tutup ka dah. Thì one talk, then later I will die again. Right? So these are the additional issues that you have to take note for your ratio topic. Okay? So I think FAR4 no more ratio lah. I think your examiner will forget about those ratio lah. Okay? Alright? So that's for your ratio topic. So the class, can you please make sure that you clear your D syllabus. We are talking about advanced financial statement analysis. Okay, not your basic financial statement analysis. Oh, okay. No idea. All right. Okay, so that is what we have done here. All right. Now for presentation and disclosure, the class this one, there is an accounting standard for the presentation of financial statement. Are you aware about that? So don't know. How many format companies A allow for P&L account? So many You so generous Oh, I don't know. The accounting standard is so generous. Okay. How many format the companies allow for the P&L account? Sorry, even accounting standard, how many format that you allow? Remember your major financial statement, you have P&L account, statement of financial position, cash flow statement, statement of changes in equity, isn't it? All right, P&L account plus your comprehensive income lah. All right. Now, for your P&L account and other comprehensive income normally standardized format. Statement of financial position, cash flow statement, statement of changes in equity. So, how many format that you have for presentation? Two, 3, 4, 10 How many format available? Okay, I start with the cash flow statement. How many ways you can prepare the cash flow statement? These are luckily good. Okay, 2 types. Which 2 types? Luckily. Okay. Who is your cash flow lecturer? Okay. The CN. Okay. So direct, indirect method. So two type only, two a third type, isn't it? Okay. So others also got two type lah. So simple. If you remember your cash flow statement only got two type, all other statement also only got two type. Okay. Now for P&L account and balance sheet, okay, you also only have two type, right? One type of the P&L account is your expenses, okay, is classified based on function. And the other one is the expenses is classified based on nature. Okay. Now, when I say expenses classified based on function means after you calculate take the sales, you minus cost of sales, you get gross profit. Then you minus your admin expenses, you have to group admin expenses, you have to group selling, distribution expenses, you have to group, okay, your marketing expenses. This is the classified according to function, right? When I say expenses classified based on nature, is the way that I take the sales minus my material costs, my labor costs, and all my expenses. So I list my expenses. I will list electricity and water, stationery, etc. I don't do the grouping. Okay, right? So this is the way that you do the P&L account. Now, which method that accounting standard prefer? They prefer this one. But this one serves as an option. Why? Because service industry, they can't classify their expenses based on function. They need to classify their expenses based on nature. Just like you look at the bank account, those cleaning company account, all right? Those like education company account, their expenses classified based on nature. But for those traditional business like trading company, manufacturing company, their expenses will classify according to the function. Okay. Now for the balance sheet, two way of presenting your P&L account. One way is take your total asset equal to your total liability plus equity. All right. Another way is take your total asset minus your current liability equal to your non-current liability plus equity. Okay, all right. Most of the service industry, they use this method. This is the more recommended method. But again, some company will do this. Okay. Now, since we talk about the cash flow, accounting standard, do they prefer direct method or indirect method? Huh? Why? For cash flow statement, accounting standard recommend direct method or indirect method? Indirect method. Sure. Sorry, accounting standard prefer direct method. Okay. That's for exam purposes. Okay. All right. Actually, accounting standard prefer direct method. Okay. However, if you look at the published account, most of the published account use indirect method. Agree? If you open most of the published account, you notice it's an indirect method. Okay. Now, actually, if you read the accounting standard, they want direct method. Why? Because direct method will prepare based on your cash book, your bank book, isn't it? Indirect method can be prepared based on your 2 years balance sheet, this year and last year, plus your current year P&L account and those additional notes. All right. And furthermore, a lot of company, they use indirect method. Why? They want to keep confidential in terms of their cash flow information. On the other words, they don't want to let people know how much is the cash volume I collected every day, how much is the cash volume I pay every day. You get what I mean? So that's why they choose indirect method. Besides that, as an auditor also prefer use indirect method. Because when I conduct an audit, your P&L account and balance sheet already audited. So that's why I just need to check the calculation. You know what I mean? Because if I need to audit the cash flow prepared under direct method, I have to audit your cash book and your bank book, which could be have a high volume of transaction. Okay, so because of that, due to economic issue, people use the indirect method. But in fact, for the accounting standard, they prefer direct method. Okay. Statement of comprehensive income, basically this one don't have many format. You are only have one format, show the breakdown of shareholders fund. Okay, so this one is pretty okay. All right, now last part. What are the 5 elements of your accounting item? What are the 5 accounting elements? Huh? Which 5? Wait, this one accounting FAR 1, FAR 1. What is the 5 accounting element? Hả? Ồ,ได้ลูก Hey, the class. Go back, revise your FAR 1. What are the definition that showing criteria? Alright. For I won't say criteria lah. For recognition. And then when the thing not being recognized. Okay. Okay. Can anyone tell me how to define your asset? Asset. What is the asset? You don't look at me like that lah. What is the meaning of asset? How do you define asset? Asset is, don't give me example, miss, table, chair, laptop, motor vehicle, land and building. The definition of asset. What is the definition of asset? Okay, those things that is owned by the company from the past event, which will be giving you the future economic benefit. Some more? Okay. Identifiable. Some more? Okay. Controllable. Some more? Yeah, the amount can be measured, okay, reliably. Okay. The class, why I ask is, when you define your asset, that definition indirectly tell you the criteria to recognize the asset. Remember when you study the FAR2, how do you recognize your intangible asset? So it must be something that will give the company future economics benefit, right? Okay. And this item can be identified separately, is within the company control, and can be measured reliably for the amount, and the company own it from past event. So if you meet all these criteria, then only you can recognize the asset. Am I right? So when you de-recognize, when it fail any of these conditions, that means that as long as fail one of them, you cannot recognize. You want to recognize, you have to pass all these criteria. Clear? Okay. Now, that goes the same thing for liability, equity, turnover, and expenses. Right? So I don't want to talk about. What is the meaning of equity? Owner fund. Sure. Ủa mà với accountant à? Residual interest. Okay. Never mind. Okay, turnover. How do you define turnover? I don't want to define liability. Liability just opposite asset only ma. Turnover. Bank San direct. Turnover. How do you define turnover? If it's a service, so how to put it in the proper statement? Provided that's a trading company. Right? Provided it's a trading company lah. All right. Okay. But that's not correct. That's called profit, isn't it? I'm talking about turnover only. Because profit is the result of turnover minus the expenses. Now I need to start with turnover only. Turnover only. Turnover. Kim, what is the meaning of turnover? À. What is the meaning of turnover? Kim also have to separately admit it again. What is the meaning of turnover? So